Markets are crashing. What is causing this, right? Is your portfolio okay right now? So Bitcoin, crypto, even the NASDAQ, they're all down right now. The NASDAQ took a beating with Nvidia down 10%. Its biggest crash, right, since the start of this year. What is causing all of this? Is it due to the war or something else? Well, if you've been following my last few videos, I've been telling you guys it's not really due to the war situation. That's more of a long-term attrition situation, right? War of attrition, not a sudden World War III scenario. What is causing stocks, crypto, and everything pulling back right now is because the world's largest bank, right, JP Morgan, and their CEO Jamie Dimon, and a bunch of so-called analysts and experts are saying interest rates in the United States could go up to as high as 8%. That is crazy. Do you know where US interest rates is at right now? Well, US interest rates right now, the Fed funds rate is only at 5.25 to 5.5%, roughly there. Imagine if it went to 8%, right? Another 3% rise from here. Imagine that. What would that do to mortgage rates? That would put mortgage rates in the United States something like 10%, 11%, right? And countries like UK, Australia, Canada would all follow. Of course, the market's freaking out about this if Jamie Dimon, the guy who's the CEO of the largest bank in the world, is right about where interest rates are going. Why is the Fed talking about this? Well, on the surface, as I explained before, the reason is because the Fed is saying, well, inflation's not coming down, inflation's not coming down, so we're going to hike rates until inflation does come down. But secretly, I'm telling you guys through the last two videos, the reason why they want to do this is to make interest rates go up in the US. So therefore, a lot of the capital from the other countries will be attracted into the US. It flows into the US, therefore pushing up the US dollar, and that'll crash the other currencies, right? Such as the Japanese yen, such as the Korean won, and especially their target is the Chinese yuan. But the price they're paying for this is that by pushing up the US bond yields, right, and the US dollar, it's also crashing the US stock market and the crypto market. But who could have predicted this? Well, it was almost 2 months ago that in my Discord, I said on QQQ, which is the NASDAQ, right, ETF, the ETF for the NASDAQ, right, would head to 404, move down to 404 area, and so far it's looking good, looking like we were on track. That was 2 months ago. And this is what the chart looks like now. This was my prediction, right, at the end of February, which is around here, right, pretty much the peak or top, and now boom, right? See, there was this large sideways channel, kind of a distribution zone, and then NASDAQ just tanked, right? Hitting 413 on Friday, so we're very close to that 404 support. So the core question is, will US hike its rates to 8%? Well, impossible, almost impossible. Let's do a little bit of simple math, right? So US owes right now currently national treasury debt around 35. It's going to get to $35 trillion kind of pretty soon. At 8% interest rate, right, roughly where the US 10-year yield is going to be, then US has to pay around something like $3 trillion a year in interest alone, not even paying principal if they went to 8%. How much is $3 trillion? Well, put it this way, all of the US government taxes is only $4.5 trillion a year. So in other words, something like 60% of all the government's income would be used to pay just interest rates, right? On interest on all that national treasury debt. So in other words, I don't think it's going to 8%. If it is, it's going to be suicide for the United States government. So in other words, I think this is a bluff. I think chances are the NASDAQ, right, as measured by the NASDAQ ETF, pulls back to around that 404, 400-ish area, and then probably bounces from there for another leg up, a final blow off top sometime probably this year. Same thing for crypto. I'm using this as a buying opportunity to buy more, right? But which ones am I buying? Follow Pablo for more updates.